Hello again, everybody. It is October 22nd. Unbelievable. And this is Cycles TV. It's great to be with you again on behalf and with the Foundation for the Study of Cycles. We are a not-for-profit, and we appreciate your support and hope you appreciate all the great content we've been bringing you here on Cycles TV. So, hope everybody's having a great week and enjoying the fall weather. If you are in a fall area of the world, I am enjoying it myself. One of my favorite times of year, speaking of cycles. So last week, we talked about Bitcoin, and we said that there were some cycles coming into play that were bearish, especially our favorite 1 week up, 1 week down cycle, but that some indications were that things might not work out quite so bearishly this time. So we'll take a look at that again. And then I know it's not as popular a subject as Bitcoin, but it actually matters a lot more than Bitcoin, even though it won't get me as many views. But today I'm going to talk about bonds. And bonds are a vastly more important and liquid market than Bitcoin. Sorry if any Bitcoin maximalists out there. But we're going to take a look at bonds. So let's get started. Take a look at our updates from last week, see what's going on. And then we will dig into bonds together, learn a little bit about cycles, and hopefully see a little bit about what might lie ahead. All right. So let me just make a few adjustments here as usual. And we're actually going to start over here. So there's two things I want to pay attention to in bonds. I'm going to go full screen here so you can see it maximized. One is what's going on with the yield curve, okay? And then two, what might we see in terms of the what the bonds might do in the immediate future. So there's two things about bonds that we have to be paying attention to. One is the yield curve, meaning kind of what the relationship is between all the different yields. And two is what might happen with bonds in the near future. Okay. So this is what we're going to get to. I'm sorry. I know I forgot Bitcoin. Let me jump back over here. Nothing like being live. So here we were looking at Bitcoin, where we were last week, right? And I'll get back to bonds in just a second here. In particular, we were looking at this 122 period cycle on the 2-hour data of Bitcoin. So that gives us about 1 week up from the 15th, or down from the 15th to the 22nd, and then up from the 22nd to the 27th. And, we had this going down here, but we said it might not be as inclined to go down quite as much. And so let me just jump back over here, because we were looking at this harmonic here, this 260, okay, that was still up, right? And pretty clear cycle on the spectrum here. We did have it up at the CRSI highs, not a perfect, bottom with a CRSI buy signal. And, we've seen some momentum work off, but this cycle, I think, is still in play. And if we look at kind of how they both combine together now, I see some potential support over the next week or so. And if we just update this to integrate the most recent data, okay, you can see things shift around a little bit. You know, this cycle down here, this 120 is breaking up a little bit. And this 260 is coming on a bit stronger. So let me just get back to no, I think that's still about right. So, you know, we haven't really seen a breakout yet. I'm still on the lookout for it. I'm partial towards it. The cycles are saying, you know, we're close. It better happen soon if it's going to happen. All right. So I think that's where we are with Bitcoin. Now back to bonds. All right. So again, here we are looking at the yield curve of Treasuries from October 21st, which is yesterday, compared to September 17th, which is right before the Federal Reserve made their 50 basis point rate cut. They did it the next day, okay? And so we can see here that here's the current yield curve, and I'm going to focus on the 2-year yield, which is about 4% right now, versus the 10-year yield, which is about 4.2%. So the 10 years above the 2-year now. That's what you expect in a normal environment. Back here on, you know, before the 50 basis point cut, we had the 2-year at about 3.6 and the 10-year at about 3.65. So it was also uninverted back then, but not as uninverted. But meanwhile, over the past month, rates have all gone up, right? So rates are going up kind of across the board, across the yield curve, but the curve is also uninverting. So they're going up faster on the longer end of the yield curve than they are on the shorter end. In particular, so this was, again, right before the Fed meeting. If we look at where things were at, you know, like a week after the Fed meeting, okay, everybody was going, wahoo, they're going to cut rates until the cows come home. But no, right? So here's where we were back on the 24th, this red line here, okay? You know, there was a big difference now between the 2-year and the 10-year. That's narrowed a bit. And again, here's where we are today, right? So before the rate cut, we were about here. After the rate cut, we were about here, okay? And now this has been moving back up over the past month, all yields going up across the board, but the curve is still uninverted. So have a bit. Oh, here's the yield curve, the 10s minus the 2s. Okay, and we can see over here that it was inverted and uninverted. And if we look at all the past times when it was inverted and then uninverted, these are recession bars, and we tended to get a recession, you know, within a year after the disinversion. Okay, so again, here's inversion, uninversion, recession, inversion, uninversion, recession, tiny inversion, uninversion, small recession, pretty darn deep reversion here, uninversion, recession. I think so, but we'll see. All right, funny little story, because I wanted to talk a little bit about this, you know, bonds all going up, right? So, and there's this idea that it's because Trump is likely to get elected and his policies are going to be worse for the debt. And so, you know, bonds are getting going down and rates are going up because Trump's going to blow up the debt with his policies. And that's part of the reason that bonds are falling right now across the yield curve, right? And rates are going up. So I went to DALL-E, which is OpenAI's image generator, right? And I said, please make me a picture of a scary Donald Trump threatening the US Treasuries market. And initially it started out saying, I can create a unique and fictional visual for you, blah, blah, blah. And I said, I like it. Let's have him holding a treasury bond in his hands, ready to tear it in two, and have the treasury bond say, Uncle Sam's IOU. And then it said to me, I wasn't able to generate the image you requested because it violates content policy guidelines. If you'd like, I can help create a different concept or adjust the theme to fit within acceptable guidelines. And I said, what policy guideline does it violate? And it said, the request violates content policy guidelines around depictions of public figures, particularly when portraying them in a threatening or harmful way. So just an interesting little interaction with our wonderful AI overlords, and thought you'd get a kick out of it. You know, I said, look, I'm doing satire. And they said, still, it violates our policy. So I said, all right, well, get me something close that doesn't violate your policy. And it came up with this. And so this is Uncle Sam, not Donald Trump, threatening to blow up the debt and destroy the IOUs. It's not supposed to be the dollar. It's supposed to be a bond, but this is just how these things work. So then then I said, well, can you please make the hair orange for the cartoon on the right? And then it gave me this. So, you know, pretty darn close to what I asked for originally. Its policies apparently aren't so inflexible after all. So I thought that was both kind of an interesting, illustrative, educational interaction with AI, together with this theme that's going on in the markets that Donald Trump is bad for bonds because, you know, his policies are just going to grow the debt and not raise our revenues and increase the deficit. I don't know if that's true or not. I'm just telling you what the narrative is. So, and a little bit about AI. All right. So carrying on, let's get into the bonds a little bit. This is 2-year Treasuries, just looking at volume at price here. So this is how much volume has traded at these prices. This is called volume at price over here. And we can see, you know, down here around where we are right now on 2-year T-notes, there's been some good volume, not as good as there was up here at the top, but decent volume. And I'd say we have some volume support at these prices. Also 2-year Treasuries. And, you know, I said back in the middle of 2024 that I thought we'd see a rally. And I covered that the daily rally has, you know, taken its run its course and is now at a top, actually a little bit into the top. And that's been pretty consistent, but we've also seen, you know, that it's still solidly above support. Okay, 2 years we're way down here at 101. You know, now they're around 103. The commercials on the 2 years are pretty darn bullish. So the smart money is buying 2-year or short-term 1 to 2 year Treasuries. Okay, the commercials in the Treasury market are buying the Treasuries, and pretty much as bullish as they've been since, you know, the beginning of the year. And more bullish than they've been for most of the past few years. So smart money is pretty bullish on Treasuries in terms of the 1 to 2 year Treasuries. If we look a little further out, I'd call this also quite bullish, although maybe not as bullish, selling off a bit, right? Lightening their load, but still pretty darn bullish levels on the longer term side of the curve as well. So the smart money is saying, you know, there's support at these prices. On the other hand, the small trader sentiment, thank you, Jake Bernstein, and your daily sentiment index, is getting more bearish, right? So we were very bullish back here in August. And then Powell came out and made his 50 basis point cut. And now it's everybody's running for the hills and bailing because the price has reversed, right? The small trader sentiment, that's us guys. Not really able to think, you know, much beyond say 2 to 4 weeks. Is not having its price dreams unfold. And so let's run for the exits because probably you had too big of a position size on. All right, seasonally, quite a bullish time for Treasuries. So again, this is T-notes, 10 years, October, November, December, January. Okay, seasonally, a pretty bullish time for Treasuries. This is also seasonality, right? So month 10, it's kind of bearish. We've been almost through that. Not quite through it, but mostly through it. And October up here on the bullish side. Same thing here on 10 years. Bullish in October. In November, sorry. Bearish in October. So seasonality, I would say, is on the side of higher prices. But we could see a little more downside before that kicks in. So that's the big picture. Now let's jump back over and look at what's going on with the cycles. So we've been all year noting that there was a pretty significant bottom in the weekly data on Treasuries, long-term data. This is mostly a 300-week cycle. So what is that? That's like 6 years. Okay. So, and that is that's still in play. Okay. With our weekly data. And this is on the 2 years. The daily data on the 2 years, on the other hand, has this very nice cycle here, 180 periods. And a nearly perfect 2 harmonic around 360. I take that off, we can see the 360 is topping, along with the 180. So topping, we can get some right extension, but overall we have to be cautious on the daily data, right? This plays out till January. So yes, it's in conflict with the seasonality. What can I say? But momentum is also quite negative here. Let me try my new trick. So we can see the CRSI, right, has a pretty nice sell signal there on the daily data. Oops. If we just look at the, so whether it's the 180 or the 180 and the 360 together, definitely some bearishness on the daily data. All right, now I'm going to jump over and look at the 10 years. So again, the 10-year, very similar cycles to the 2-year, and definitely room left to run with momentum, with the cycles, and we'll get to trend in just a minute. But bullish from the weekly, and similar situation to the 2-year on the daily charts. Okay, turn on the cyclic RSI here. But momentum is even weaker, and it's a perfect 1-2 harmonic with 180 and 360 cycles, you know, being the number one, in this case, number 4. But both strong cycles that happen to be perfect harmonics of one another. Here's 87. I haven't looked at that one, but you know, that's half of the 180. So whichever way you look at it, you know, on the weekly data, sorry, the daily data, the cycles are bearish. All right, now drilling down into some shorter term cycles, hourly cycles, we have some pretty nice bottoms forming at the moment. So here is the 2-hour, 2-year data, sorry, 2-year Treasuries, 1-hour data. And we've got this 203 right here. Let me just change this 203 and this 117 right here. Couple of the important cycles. All giving a pretty nice bottom, along with a decent momentum buy signal here. Okay. And if we do the same thing on the 10-year data, it's 138 here. Also coming into a bottom, maybe not quite there yet, but getting close, and a nice upward turn in the momentum. So we can also look at this 300 here. That's a little more bearish. So overall, what I'm seeing is that the dailies are in the solidly bearish formation, but the shorter term, the 1-hour data, the persistent cycles that I'm seeing, the fact that we're at a pretty strong area of support, the fact that commercials are pretty bullish, the fact that the smart money, that the small trader is getting bearish, I think we could see another week or so of weakness. But on the whole, I'm starting to look for a bottom in bonds, support from the seasonality, and but keeping an eye out on the daily cycles, which suggest caution for the next couple of months. So I know that's a mixed bag. I think understanding what's happening with bonds right now is important. I do think it's partly driven by the narrative that Trump is possibly going to win the election. That's certainly a theme in the financial markets right now. But overall, I think that there is some support for bonds at these levels. I think that the yield curve is likely to continue to uninvert. which will lead to a recession probably sometime in 25. I'm interested in these short-term buying signals, but I wouldn't be staying long. I wouldn't be staying in the markets for a long time on the long side with the daily cycles being where they are. So I know that's all a bit of a muddle. Let me take a break from the charts and let's see what's on your mind and what you would like to look at together. So, all right, hello. Thank you everybody for saying hello. It's not the height of trading wisdom to ignore one of the largest markets in the world. Bitcoin and gold bugs too are some of the worst offenders at shrugging off anything else. I have to agree with you, Trader Gene. I think a huge part of successful investing and trading is actually being able to not focus on the things that most people, most small traders, let's face it, are focused on. And the big money, the institutional money is definitely focused on bonds. So JAH, Bitcoin will top on October 25th and is rolling over as we speak. Okay. Go Richard, great AI picture. Isn't that funny? I mean, look, I use AI. I'm a fan of it, but I got a lot of issues with it. And I thought that was pretty funny. Have you looked at different Treasury yield spreads on the cycle analyzer? Great question. The 10-year 3-month spread is inverted. Does it matter which spread you look at? So there's a lot of debate on this. I think the 10-year minus the 2-year is the most widely watched. But you're right. The 10-year minus the 3-month is still inverted. You can go to the Fed, the St. Louis Fed website, and you can look it up and make a chart similar to what I made for the 10 minus the 2s. You can make 10 minus the 3s, 3 months, and look at the recession indicators there. I haven't looked at it in the recent past, but it's a good question. I encourage you to check it out. NH, have you looked at the spread on the cycle in addition to the individual yield on a treasury? I haven't gotten a lot of value out of looking at the spread on, the yield on one treasury minus another. I just tend to look at the cycles on the treasuries themselves. TY for this bond overview. Oh, you're welcome. Not TY as in 10-year, but as in thank you. You're welcome. Little flight to quality as S&P 500 makes a small dip in October. I wouldn't disagree, Bruno. I think we could definitely see that. Mark asking about silver. My bearish indicators are flashing on silver, but it has yet to acquiesce, at least as of half an hour ago when I last checked it. So momentum is still pretty darn intact with gold and silver, but I am seeing a lot of topping cycles and a lot of falling CRSI sell signals in the metals. I personally am short the metals right now, silver and copper, but I think it's a good place to go short and keep a tight stop. Could you take the YM short term? We could take a look at it. Not sure. You want to take a look at it or you want to short it or buy it? So yeah, we'll take a look at it. TLT bottomed out around this time for the last 2 years. Yeah, it's the seasonally bullish time of the year. Yeah, take a look at it. All right. So let's see where we're at. We've been at it about a half an hour. Let me jump back over and let's take a look at a few things. All right. This is, I know it's not going to make a ton of sense, but this is basically my kind of master table of my personal cycles indicators, the ones I follow the most. YM here, the Dow. The trends are pretty bullish. All the markets on the daily and weekly are topping, right? We've talked about that. But we can definitely take a look at YM. I pulled this up because I wanted to go down and just look at where we're at with the trends. I think people have been appreciating this. The stock market trends have turned up. I wouldn't say they've made new highs, but they're not continuing to go down sharply. Here's the Dow trends. So we can look at YM, Russell, the little train that could or not, hasn't made it yet. But here's the Treasuries, 2 years. You can see the trends, my trend indicators down on the twos. Still all these trends on the Treasuries are in the basement, other than 10s and 30s pulling up a little bit more. Metals still working off with some of their trends. Copper down in particular. And then Bitcoin and Ethereum. I still think Ethereum's weaker than Bitcoin. Gas and oil, natural gas, and the dollar. This is the biggie right here. The dollar has been on fire. And in the United States, everything's priced in dollars. So that means that it's hard for things to go up in price when the dollar is also going up in price. All right. So let's take a look at the signals in YM. That should be back up here. Yeah. Okay. Guess I've expired. All right. So YM. Of course, on the daily data, right? Always looking for something around 80. This is a little high, closer to 90, but definitely overstayed its welcome here. And you can see that it's flirting with a CRSI sell signal. And if we look at some of the shorter term data on the Dow, like here's the 2-hour data. $131 and $266. Love it when I see those 1-2 harmonics. You can kind of see the picture there. So drill down a little bit. Yeah, I mean, maybe some short-term bullishness. That's what the cycles are looking like. All right, other Anything else you would like to look at while we got the charts up here? How do we interpret the magnitude of the peaks and troughs on the cycle graphs? Trend, strength, predictive power. I assume you mean the peaks and troughs here, like in this cycle. So they're really timing indicators, not magnitude. This doesn't mean, that this is going up, that price is going to come back up to here. Cycles are not about, the price extension. They're really about timing the turns. And so that's how you read it. You really look at it just as, okay, I think of cycles as like the windsock at an airport. They're telling us which way the wind is blowing. Doesn't mean price can't, fly down into an upwind or up into a downwind, but you do want to know which way the wind is blowing. And that's basically what I think cycles tell us. They don't tell us really much about the amplitude of price. All right, so just wrapping up now. Bonds are a mixed bag right now. I think we have to acknowledge that there's a lot of confusion in the markets right now. There's a lot of mixed signals in the markets right now. I do think we're at some short-term support. If not right now, then maybe in the next week. We do see the smart money accumulating Treasuries. As Bruno suggested, I think we could see a little relief rally. But I wouldn't be staying super long, even with the bullish seasonality, because I do think the cycles are giving us caution over the next couple of months. And bonds really are more important than Bitcoin. So hope that's been educational and helpful. And look forward to seeing you all again next week. Have a great week, everybody. Bye-bye.